Mike, Night Prowler. Night Prowler, cool. Caleb, Steve, Quill, Patty Lambert, Fira. What's going on, Fira? Florida, Georgia, country. How are you today, Jim Crow? Why would you use a name like Jim Crow? The name just, Yo, yo, Amache, what's going on? Doc Mocha. Okay. User 779241565668. Couldn't your parents come up with a good number? Just kind of curious. That's a kind of weird number. What do they call you for short? 77? Thoughts on KHC? Jeff wants to take a look at Kraft Heinz. Are you the dividend guy? Cool beans. Doing great. Enjoying your program. Thank you very much. Deepa, how you doing? Tiago de Melo. Cool. Charles, what's going on? Alrighty, so we are live. Oh, wait a second. One more. Down here. Streaming. Yeah, so now we are streaming. Okay, yep, now we're streaming. Cool beans. We're ready to roll. All right. Here we go this evening. Yeah, buddy. Okay. Hola, ¿qué pasa, amigo? Pedro, ¿qué pasa? Leslie, good evening, Leslie. How are you? Waco Clip, what's going on? Kid Hundo wants to take a look at Cisco, SYY. We're going to take a look at that in a little bit. First one on the list. What is the first? Let's do SYY. It's the first one on the list. What else do we have? Wait a minute. Somebody want to take a look at something? I just know it. All right, so we'll look at Kid Hundo wants to take a look at SYY, Cisco. Now there are two Ciscos, SYY and CSCO. Cisco. Which one is it? SYY, well, let's give it a try. SYY. Cisco, no. Imagine that. It was a no right off the bat. The very first one we're looking at tonight, no. Why is it a no? Well, here we go. September, October, November, January, February, March. Those are months of the year. That means that is a monthly optionable stock. I don't do monthlies. The numbers just don't work. Terribly sorry. You may like it. Hey, more power to you. I don't do monthlies. You can only do it once a month, which means only 12 times a year. 12 times a year means I'm only making 12 to 24%. Now, you may like the idea of 12 to 24%, but I don't. I want 50 to 100%. I can't do that with a monthly optionable stock. It has to be a weekly. Whale clip. Edwin. Thank you there, Edwin. User 7540. Can you explain how you did when the margin call not to be forced to sell or put more money in? Okay, so user 75407733393336. Yeah, whatever. GameStop. Yeah, no, it ain't going to happen. What are we learning, Professor? We are learning dividend investing for weekly cash flow. Okay, so user 754077, blah, 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 blah. A margin call basically means I don't have enough money and I borrowed someone else's money. So when a stock goes down, you get what is called a margin call, which means cough up some more buddy, or we're going to liquidate your positions and you're going to lose. So what do you have? You have a couple of choices. One, you can sell something at a loss. Two, you can throw more money in it. Or three, you can take whatever options you sold against those positions and push them far enough forward into the future where you don't have to come up with any money. Now, Wild Clip wants to take a look at DuPont. Well, isn't DuPont, is it, I don't know, D is Dominion, isn't it? Yeah, Dominion. DD is DuPont. DuPont, there we go, DD, DuPont. D is Dominion, DuPont is DD. Okay, first thing I always want to look at is the chart. The high, the low, where was it? Where is it? Look at this. Up, down, up, down, up, down, up. It's definitely in an upward trend. 74.55 is the big number on the board. 4 times. 74, right there. Now let's move that over so we can see these numbers. Now, I do everything A, B, C. 1, 2, 3. Everything has a step. Step 1, step 2, step 3, so on and so forth. Step number 1 is always amass a list. Come up with a list of companies that you like. Now we check every single week. This week there is 10,340. That's a lot. So how do you decide which one's the right place to put your money? Well, I have some strict rules for myself. That's for myself. You guys got to figure out what's right for you. Hold on, I got a couple questions here. Don't you support Israel? Don't even start. We're learning trading today. Yes, we are. Are you employed, sir? Steve, what the hell does me being employed got to do with anything? Seriously. I've been working since 1973, but I retired 2 years ago after 5, count them, my brother, 1, 2, 3, 4, 5 decades. 5 decades of working. My first job was in 1973. Okay, I think 5 decades is enough to work. And besides, I have enough money to retire. I don't need to work anymore. Hi, what are we talking about? Gage, we're talking about investing for dividend stocks for weekly cash flow. Let's take a look at where we are. Let's not get interrupted by the latecomers. Sorry, don't mean to insult you in any way. But here we go. So DuPont. I like the way the numbers are looking. Okay? 74.55, we're going to be looking at the 75s, which are paying 80 cents. Now, I know 80 cents doesn't sound like a lot of money, but it is over 1%. Now, I'm looking for a simple, safe, predictable, consistent 1% per week. If you're here looking for a stock that's going to shoot through the roof and you be set for the rest of your life, you are in the wrong place. I'm terribly sorry. There's so many different trading strategies. There's so many people out there sharing what they know. Well, what I know is simple, safe, predictable, consistent 1% per week. It's slow, it's boring, it's monotonous. It's the same thing over and over and over again. If you're looking for excitement, this ain't it. If you're looking for something that's going to change your life overnight, this ain't it. Like I said, it's slow, it's boring, it's monotonous. But here's something. It's predictable, it's consistent, and it's profitable. Now, I know 1% a week doesn't sound like a lot, but at the end of the year, that's over a 50% return. Now, I'm only looking to sit in front of my computer for 5 to 10 minutes a day. That's it. I have better things to do. As you get older, you will learn tick tock, it's going faster. Okay? The days I have are less than I would like to admit. Okay? I'd be lucky if I get another 20 years. That's 20 more Christmases. That's it. My grandson's only 5 years old. I would like to see my grandson get married. I really would. I'd like to see some more grandchildren. But that's got nothing to do with me, you know. I can encourage them, but how much encouragement can I really give them? You know what I mean? Anyway, we're here to look at safe, predictable, consistent strategy to get a safe, consistent profit. I'm repeating myself. Sorry. You do that when you get older. Cut me some slack, okay? So, here we are looking at DuPont. Now, I'm very specific at what I want. Now, I don't mind DuPont. It's over 100 years old. And yeah, they have been consistently profitable. So, let's take a look. All right. I need the glasses for this one. A year ago, DuPont is at 79.83. So, here's an interesting question for you. If a year ago we're at 79.83 and today we're at 74, what the hell kind of investment is that? But look at what you missed throughout the year. It went up, it came down. Up, it went down. Up, it went down. Up, it went down. Up, it went down. Every time she goes up, it's a possibility to get a profit. Every time she gets down, it's a great time to take profits and then buy it when it's low. See, I like to sell as it's going up. Once it comes down and stops, that's where I like to jump in. It goes back up, then it comes back down. That's where I want to jump in. Up, back down. Up, back down. Up, back down. That's what they do. They go up, they go down. That's it. If you find a company that you like, such as DuPont, keep an eye on it day after day after day because the chart will tell you what it's doing for the most part. You just got to learn how to read it. Listen, watch. It's not that difficult. High, low, where was it? Where is it? What's the direction? Up, down, up, down, up, down, up. It's not that difficult. The strategy I'm about to share with you this evening was created for my 9-year-old daughter, 2008. She says, Daddy, what are you doing? Daddy, what are you doing? I'm on my computer doing my trade because I've been trading for 5 or 6 years before that. Okay, and then in 2008, she says, Daddy, what are you doing? Can you teach me? What kind of a 9-year-old little girl wants to learn how to trade stocks? It's not, Daddy, can we go get a puppy? Daddy, can we get some hamsters? Or Daddy, can we get some parakeets or some birds? Or Daddy, can we get me a new dress? Daddy, can we? No, Daddy, can you teach me how to trade stocks? 9-year-old girl. So anyway, for my 9-year-old girl, I had to come up with 5 criteria. 1, it had to be simple. After all, she's only 9 years old. Number 2, it had to be safe. I didn't want her losing any money because we all know what's going to happen then. Daddy's evil, Daddy's mean, Daddy's terrible because she's losing her money. Didn't want that to happen because, I'd be the dick sleeping on the couch. You know what I mean? Consistent. I wanted her to be profitable consistently. No way for her to lose. Sorry, simple, safe, predictable. Yeah, predictable, consistent, and no way for her to lose. So that's the criteria. So how do you overcome that? Simple. You come up with rules. Rules are great. A lot of people think they suck because, you don't agree with them. Terribly sorry. If you want something in life, there's always something has to give. Something's got to give. It was a great movie, by the way. Jack Nicholson and Diane Lane. Oh, love that movie. Anyway. No, yeah, something's got to give. That's Jack Nicholson and, what's her name? Helen Hunt. Is it Helen Hunt? Jack Nicholson, something's got to give. Anyway, besides the point. Okay, so back to where we were. For a 9-year-old, simple, safe, predictable, consistent, no way for her to lose. So 5 rules. Rule number 1, if it doesn't make sense, if you don't want to own it for the rest of your life, if you don't know who they are, what they do, don't buy it. Simple. If you don't want to own it for the rest of your life and you don't understand what they do, you don't know everything about them, don't buy it. Don't put your hard-earned money into something you don't believe in, which means if you buy it up here at $90 and it drops all the way down here to 55, which is almost a 50% drop. If she drops 50%, you got to sit there and say, so what? I like the company. Rule number 2. Never sell at a loss. It defeats the purpose of the program. Now, a company such as this, would I mind if it was here and it dropped down to there? No. Do you know why? Because number 1, it has weekly options, which allows me to have some kind of cash flow on a weekly basis. 2, it has ever increasing dividends. It means each year they give out more and more money to their investors. So if you own stock, you get a dividend every 90 days. And every year, that dividend gets higher and higher and higher. So do I really care if it drops? No. Because if I buy it at 90, you buy it at 50, and they're paying a $1 dividend, guess what you're getting? $1. Guess what I'm getting? $1. The price of the stock really doesn't have anything to do with the qualifications of getting a dividend or doing a covered call. It's all subjective and it's all by the numbers. We're going to get into that a little bit later too. So, rule 2, never sell a loss. Rule 3, this one you're going to find rather interesting because when I say rule 3 is make sure that, what did I get? What is that? Who's that? Mac. Whoa. Rule 3, make sure the company is consistently profitable. I have 2 criteria and only 2 for every stock that I buy. Only 2. Can you believe that? My analysis. My scanner, no, that's not a good word for it either. Parameters, no. I'll come up with a word in a minute, but hold on. I'm only looking for 2 things. If I'm going to invest in a stock, 2 criteria, only 2. Number 1, consistency of profitability. That means the company's got to be consistently profitable year after year after year after year. You've got to decide how many years works for you. For me, 2 decades is perfect. That's 20 years. Now, you might think that's a long time, but no, it's not. The stock market's been around for 400 years. 1602 was the first dividend stock sold. They went door to door. Hello, have I got a great deal for you? You invest in our company. We promise to split the profits with you. That was the promise that they made. Invest in our company and we will share the profits with you. 1602, the very first dividend stock. Stock market's been around for over 400 years. So, 2 decades is not a lot. Second thing I'm looking for, consistency of profitability, at least 2 decades. And number 2, weekly options. I'm looking for weekly cash flow. I can't get weekly cash flow with a company that pays monthly options. That doesn't work for me. I can't get, well, I could get weekly cash flow if I want to sit in front of my computer looking at this crap all day. Yeah, no. Sorry, that just ain't going to work. 2 things and only 2 things. Consistency of profitability and weekly options. That's all I'm looking for. Rule 3, make sure the company's consistently profitable. As we go through the night, you will notice some of your friends here, some of your colleagues, some of the other investors, they're going to be putting up some stocks and saying, hey, I like this one. Let's take a look at it. I'm going to take one look at it and saying, what the hell were you thinking? This company's not consistently profitable. Why are you putting your money there? We're all different. We all have different goals. Well, my goal is consistency of profitability. To me, it doesn't make sense to invest my hard-earned money into a company that's not profitable consistently. I'm not talking about these brand new companies that 1, 2, 3, 4 years old. No. I want some historical performance. Okay? I want to put my money on the winning horse. Sorry, it's just the way it is. If a management company can run a business successfully for 2 decades and be consistently profitable, I'm thinking maybe they can do 21 years, 22, 23. That's the place where I want to hitch my pony to. Rule number 4, weekly options only. I think we already touched on that one. Rule 5, make sure all the numbers work. Now, we're going to do a couple of sample trades as the day progresses, and you'll be able to see how those work. Now, when you ask questions, please keep in mind, I'm not ignoring you. I'm not belittling your efforts on your engagement. I'm not doing any of that. I have 6 screens in front of me, which means I got questions here, I got questions here, I got questions here, I got questions there, questions there, questions there. I haven't figured out how to get the questions down there yet because we're streaming on 9 different channels. 9, which means I should have 9 sets of questions, but I can't get to those other 3 or 4 down there. So, yeah, we'll be bringing in a moderator sometime, I think next week, the week after. I don't know, as soon as we can get him in here. And he'll be going through all the questions. This way, I'm hearing myself as an echo. Hold on, I got to mute this. Joanna, that was you. Drazik, what's going on? All right, so you guys want to speak up, just unmute yourself and just speak right up, okay? What was I saying? Oh, yeah, that should be like next week or the week after. That way, everybody will get a chance to ask a question. And I won't have to worry about trolls because I need someone to go through all the questions to get rid of the negative people, the trolls, the people who have nothing better to do, the childish ones that ask the stupid-ass questions. Okay, we've all seen them. We've all seen some of the stupid questions people ask. Okay, they just do it to get a rise out of me. Well, I really honestly don't care. Really, I don't. It's weird. All right, so anyway, DuPont. No, wait a minute. Yeah, because that's a weekly. Yeah, weekly. Weekly. I like weekly. Huh. Are they changing? Because it says 22 August, which is this week. 29 August, that's next week. But 19 September, we're missing a couple weeks in there. I don't know. We'll find out.
Yeah, I thought it was crazy. Yeah.
Okay. Okay. So let's do this. All right. So DuPont. Currently the 75 is going for 80 cents. Yeah, so I like that one. So let's look a little deeper into the numbers and see what the charts are telling us. Now, I look at the same charts over and over again. 1 year, 90-day, 30-day. And sometimes I'll look at the seasonality chart. What do we got for questions here? What are we learning tonight? Okay. Hi, Alice here. I experienced organization a dorm room for the first time. Jesus. This is what I need to... What about Aerodyne? You got to tell me what the stock symbol is. Said hi. Should I put 200 a month in XRP? I can't tell you about XRP. I don't do XRP. Weekly cash flow, but I would like to learn. Cool beans, Georgia boy, just hang tight and keep asking questions. You need some moderators. Absolutely, I do, Joseph. What is the difference between swing and day trading? I think you just answered yourself. Day trading means you do it every single day. Swing trading means you do it whenever you feel like it, when everything goes your way, I suppose. All right, so let's take a look at the numbers for DuPont and try to get to some serious questions. A year ago, oh yeah, we did talk about that. $80. The high of the year was in the end of September of last year, 89.80. We bottomed out in the second week of April around 54. But look at the bottom here, 54. Shoots up nicely, profit taking, now she's shooting back up again. Well, that's easy. High, low, where was it? Where is it? Look at the motion. Up, down, up. Not that difficult. Okay, try not to make it more complicated than it needs to be. It was created for a 9-year-old little girl. Okay, all right, last 30 days. Now, what do you think for the last 30 days? High, low, where was it? Where is it? Up, down, up. Really not that difficult, but it is in an upward trend. Goes from 70 to 75. It's only $5. That's not even 10%. Was that like 8%, something like that? So it does have more room to keep going. 78 is the high right here, and we're here right now. So we've still got plenty of room to move. If, and it always comes down to if I like DuPont. If. So it's always a big question. Do I like DuPont? Do I like it at this price? Is this a company I'm willing to buy and hold on to? Well, those are good questions. Let's see what it looks like. Now, remember, I told you we're going to do a couple of samples. So we're going to do a sample on DuPont right now. Covered call. Now, when I say I like to do a simple, safe, predictable, consistent trade, well, this one has a weekly option, which means I can do it every single week, week after week after week after week after week after week, 52 times a year, 13 times a quarter. Anyway, let's keep on going. All right, so I want to change this up first. I don't want to do 10, I just want to do 1 so you can understand the numbers involved and see what it looks like. Here we go, you ready? Buy 1 covered call of DuPont. 29 August 25. That's next Friday. Not this Friday, it's next Friday. No, I gotta change that. That's why I tell people you gotta read it out loud to make sure you got it right. There we go, try it one more time. 1 covered call, DuPont, 29 August, that's next Friday. The $75 call option at the market to open to open. Okay, so if I'm buying it at 74.55, well, my target is 75, right there. Okay, remember where I said simple, safe, predictable? Well, I know what my profit is right here before I even do it. Now, most people say, well, to buy a stock, you got to wait for it to go up. No, you don't. It depends on the trading strategy in which you use. So what strategy are you going to use? Well, for my 9-year-old, it had to be a simple one. Now, a covered call is pretty simple because I'm buying it here, 74.55. The closest strike price to 74.55 is 75. I could do the 74s. That's a safer trade because there's always going to be a balance between safety and profitability. Safety, profitability. Well, I don't mind buying it at 74.55 because you know what? It's DuPont. I know who they are. I know what they do. Okay, so here's my profit. Okay, cost of the trade, including commissions and fees. I know exactly what it's going to cost me. I know exactly what I'm going to make. So let's check out the numbers, plug it into the calculator to see what the rate of return for the week for DuPont and see if it's a yes or a no. All right, so calculator, find out the rate of return. You take the profit, 130. You divide it by the investment, 73.70, and it comes to a grand total of 1.76%. That's 1.75%. Now, you may think that sucks, but think about it this way. It's only 1 week. If I get 1.75% every single week, that's what, 75, 80% at the end of the year? I could live comfortably on that. As a matter of fact, I can live comfortably on 1%. This is 1.75. But the big question, does it make sense? It's an honest, valid question. Does it make sense? It's a simple yes, no question. Either it makes sense or it doesn't. Okay? Second, do I like DuPont? That's a big question. The first one, does it make sense? That's a big question. Do I like DuPont? That's a valid question. Do I like DuPont? Question 3. Do I like DuPont at this current price? Am I willing to buy it and hold on to it for the rest of my life? It's a very good question. And you should never buy anything unless you're willing to hold on to it. 1, for the rest of your life, or 2, until it hits your target. Well, I got no problem holding on to DuPont. They've been around for 100 years. I really don't think the next 2025 they're going to disappear. Well, here's the thing. This is what I'm getting, roughly, on a weekly basis. $130, 1.75% per week. I can live with that very comfortably. You've got to decide, do I like DuPont? Let's go on to the next one. I'm going to write DuPont down. Okay. Next. Let's get back to the beginning. Here we go. Next one on the list, TD. TD, I have no idea what you're talking about. Austin, here early tonight. Ooh. All right. What do we have? Charles Tiago de Mello. Deepa, what's going on? Kid, we already looked at Cisco. SYY, we already looked at that one. Clip, DuPont, there we go. World you want to live in, girl. Why can't I just call you Sally? ExxonMobil, Devon Energy, and Schlumberger. No hi, hello, how you doing? Haven't seen you in a while. Just ExxonMobil, Devon Energy, Schlumberger. All right. I know when I'm not loved anymore. ExxonMobil, XOM. Ooh, look at that. I want to take a look at that. High, low, where was it? Where is it? Up, down, up, down, up, down, up. It's at 109.23. The 109s are going for 154. Well, that's over 1%, right? It's ExxonMobil. We all know who they are. Let's take a look. Let's take a gander at ExxonMobil. A year ago, we were at 114.27. The high of the year was in the first week of October, 126.28. And then we dropped right there the second week of April, 97.80. Hey, the last 3 months. Here's the high, here's the low. Look at this, up, down, up, down, up. Not that difficult to see that, right? So that's 1 year. 3 months. Now I want to look at 1 month. What is it doing in the last 30 days? And can it continue doing that? So where do we think it's going next? Now that right there should be shouting at you really loud. Look at this. Up, down, up. What do you think? Do you think it's in an upward trend? It sure looks like it. It's at 109 here. The bottom's here. The top's way up here. Got plenty of room to keep going. If and only if, do you like ExxonMobil? Do you like Exxon? I'm sorry, I tell you, this is not exciting at all. It's the same questions over and over and over again. What does it look like it's doing? I mean, is it really that difficult to see that? Up, down. You know what? Let's make it even easier. Watch this. This is even easier. Whoops. What do you think? You think that's easier? Look, up, down, up. It's the exact same thing. It's a line chart rather than a candle. You might need to have that. Because if you don't understand candles, well, it's the same thing. Here's the high, here's the low, here's where it was, here's where it is. It's the same thing. It's just a different way of looking at the numbers. The numbers are all the exact same, just a different way of looking at it. Here's the bar chart. Look, bar, okay? High, low, open, close. High, low, open, close. Up, down, up. It's the exact same thing, exact same numbers. Whatever you need to do to make it easier and for you to understand and easier for you to do it. Whatever it takes, you got to figure it out because we're all different. We all want the same thing. We all want our families to be happy, healthy, and well cared for. We're here because we want to see, could this work for me? Does it make sense for me? Because it's not for everyone. Number one, it's boring as hell. Number two, it's monotonous. It's the same thing over and over again. You're going to hear me say it. High, low, where was it? Where is it? Up, down, up, down. That's it. It's the same things over and over and over again. Nothing changes in my little world, not here anyway. But you know what? It's predictable, it's consistent, it's boring in hell, but it's also profitable. And it's only 1% of it. It only takes 5 or 10 minutes. 5 or 10 minutes a day, 1%. Now, it doesn't sound like a lot, but wait till you're in your 50s and 60s and it's time to retire. And that little money you put aside, $5 here, $10 there, $50 there, whatever, over a 20, 30-year period of working, $5, $10, $20, $30, whatever it is, it adds up. So when you're in your 60s and you're thinking about retiring, you should have at least 6 digits, which means at least 100,000. At least. If you're in your 60s, if you've been working 40, 50 years of your life, you didn't get divorced and someone didn't take all your money from you, well, then you should have at least 6 digits in your account. You should. 50 or 60 years of your life. That's a lot of time. So let's look at it this way. If I have $100,000, 10 minutes a day, 5 or 10 minutes a day, because once you learn it, it's easy. Think about driving a car. First time behind the wheel, nobody said, oh, this is easy. No. You know, the keys here, the ignition's here, I got to listen to it to make sure it starts up right. I got the brake here, the gas here. What if I have a clutch and a stick shift? Rear view mirrors to see where I'm going. Rear view mirror here. Gas gauge, temperature gauge, altimeter. And I got to see where I'm going too. Yeah. First time behind the wheel, nobody said, breeze. Same thing here. Once you learn how to do it, you throw me the key, boop, I'm gone. It's less than a couple of seconds once you understand how to drive a car. Doesn't take long. Adjust the seat, put the seat belt on, adjust the mirror, boop, got the gas, good, everything looks good, let's go. This is the same thing. It's a new language. Okay, when you were 6 or 7 years old, you had no idea what an altimeter was or a speedometer was. You have no idea. You have no idea what a check engine light meant when you were 6 or 7 years old. But when you're 18, 19, 20 years old and you're behind the wheel of a car, yeah, then you understand. Then you understand what the bid, the ask, the high, the low, the open, the close, what all that means. It's one step at a time. And once you learn it, it's 5 or 10 minutes a day. So back to my example. You got 100 grand, 5 or 10 minutes a day is only 1 hour. 1 hour to produce 1% of whatever you got. If you got 50 grand, 1 hour of your time is worth $500. If you got 20 grand, 1 hour of your time is worth $200. If you have 100,000, 1 hour of your time is worth $1,000. You got $1 million, 1 hour of your time is worth $10,000. So you're not the same as the guy next to you, the lady across the street. We're all different. We all have our own journey. We all have our own destination. We all have our own risk parameters. We're all different. Don't compare yourself to someone else. You're on your own journey. Figure out what works for you. So what works for me may not work for you. I'm just showing you what I'm doing. As a matter of fact, I'm really not showing you what I'm doing. I'm creating a video log for my children and my grandchildren because I'm not delusional thinking I'm going to be here for the next 20, 30, 40, 50 years. Now, you may say, why the hell are you doing that? Well, the stock market's been around for 400 years. Funny thing is, I wrote a book once. Well, I wrote 14, but one of the books I wrote, I submitted it, and I got a rejection letter. He said that the rejection letter was, this sounds like plagiarism. We've heard this stuff before. So I actually wrote back a letter. Yeah, no shit, dumbass. The stock market's been around for 400 years. How many different words can you come up with for the word stock? How many different words can you come up with? Hey, it goes up, it goes down. It's a 400-year-old topic. You can't come up with a whole bunch of new words for a 400-year-old topic. So anyway, after I explained that to him, oh, okay, guess you did write it. Yeah, I did write it, you idiot. I mean, stock goes up. Do you know how many people in the last 400 years said, hey, the stock goes up? Whole shitload. How many books have been written about the stock market over the last 400 years? Of course someone's going to sound this simple. Right, anyway, besides the point. So, do you like Exxon? Let me go back to the candles, because I'm not quite sure how what you guys like. So I want to keep everything basically the same, which is kind of weird, because if you look at some of my videos from 10, 15 years ago, yep, I got videos from 10 to 15 years ago, just in case you were wondering, they're all doing the same thing. 1-year chart, 90-day chart, 30-day chart. What is the motion? What is the stock doing? Okay, what is this looking like? Am I profitable or am I not? Oh, I want to show you something. You'll get a kick out of it. You might get a kick out of this. Some people do, some people don't. Right there. Now, I'm going to go to the website, The10MinuteTrader. That's my website. You can do some research on it. It's been around for years. About 20 some odd years, as a matter of fact. Okay, so we're going to go to 2024, all my trades from last year. Okay, I'm going to go all the way to the bottom because there's something here I want to show you. Here we go. Okay, my very first blog post. Now, back in 2011, which was what, 10, 15, 16, 15 years ago, 14 years ago, whatever. Anyway, back then, they didn't have video. It was all blogs. Everybody had a blog. Well, I had one too. I was sharing my blog, my trading experiences. My very first blog was August 31st, 2011. Very first one. This one right here just happens to be July 6, 2013. This one down here, this is the one I wanted to show you, right there. Okay, March 23rd, 2013. Look at this, the 1-year chart, the 90-day chart, the 30-day chart. And here's the little description of what I wrote back then, because that was the videos. Because 2011, it was all blogs, but in 2012 and 2013, it went to video. And the video program I had was absolutely horrible. If you look at some of these, you'll notice they get not really focused, not really clear. But that's what the technology was back in 2013. Okay? 90-day chart, 30-day, 1-year chart, 90-day chart, 30-day chart. All says the same thing. Okay? And yeah, some of these posts from a long time. Oh, look at this one. Wait. Come on. Stop right there. The 10-minute trading system. Look at me back then. Holy cow, I had a lot of hair back then. Look at this. 1, 2, 3, 4, 5. 5 computer screens. That was a long time ago. Nowadays, it's just one. Anyway, enough of that. Enough of that silliness. Yeah, so anyway, I've been doing this for a while. And yeah, it's always the same. Can you imagine it 15 years doing the exact same thing over and over and over again every single day? It's not like once a week or once every other week. No, it's every single day. Why? Well, because a long time ago, I came to the realization no one's coming to my rescue. Okay, I've seen what the powers that be offer. You want to get a CD? Great, 1.5% for the year. Who the hell can live off of 1.5%? Who in a blue collar? I was a blue collar worker. I was, I swept floors, I did dishes, I served tables. I did a lot of things. I even owned my own manufacturing company at one point. I had 26 employees at the height of my heyday. But besides the point, what was offered to us growing up? Growing up, I was offered what I remember. It was a big deal when they were giving like a 6% interest on savings account. This was a long time ago. Well, now what is the interest rate now? 1.5% if you're lucky. Anyway, let's get back to where we are. So, all right, we don't need that. Let's go back to here. All right. Next. Oh, so that's ExxonMobil, the 109s. Let's do the 109s. Just so we can, say we did ExxonMobil. So here we go. 109. There it is. One contract. That way you get to see what one equals. And then you do that fancy math. Well, if one is this, maybe I can get 4. Maybe I can get 42. I don't know. We all have a different amount of money to play with. The market, here we go. And here's Johnny by 1 covered call. ExxonMobil 100. That's the weekly 29 August. 109 call option at the market to open. Now the reason it says to open means we're doing 2 trades at once. We're buying the stock. That gets sent off to New York. We're selling the option, which is the right for someone to buy it from us at a certain price by a certain date. That's what an option is. See, if you like a stock, you might want to buy it, but maybe you don't want to pay the price now. But you know what? I think it might go up. So why don't I just buy an option that gives me the right to buy it, not the obligation? Well, great, because if the stock jumps up, well, now I can buy it at a lower price. That's the beauty of a call option. Now, I don't buy them. I sell them. Now, the reason why I sell them, because, you ready for this? 80% of all options expire worthless. So think about that. You want to buy an option? 80% of them expire worthless. What makes you think the one you buy isn't going to be worthless at the time of expiration? So I want to be a seller because I want that part on my side. See, I want to be right 80% of the time. See, if I buy an option, I'm right 20% of the time. Yeah, no, thank you. I prefer 80%. So if I stack all the odds and probabilities in my favor, only pick good quality companies that are consistently profitable, and I know when they're going to go up in stock price. I bet you a bunch of them say, how do you know that? Well, let me show you. Let's get out of this. Oh, wait a second. Let's take a look at the numbers for ExxonMobil before we go and show you that. Calculator. Profit, 136. Cost of the trade, including commissions and fees, my investment, is $10,746. $10,746. 1.26%. So we looked at DuPont was paying 1 3/4. This one's paying 1 1/4. So if 1% every single week is 50% a year, you got DuPont paying 1 3/4. You got ExxonMobil paying 1 1/4. Now you get the choice, all right? Which one do I like? Well, I like both of them, and they both look good. But, how do I know when a stock is going to move? You ready? Let's go to that one. Let's get out of here. Let's get back to here, and let's go to right there. Do you see that? What does that look like? Does that look familiar to you? Well, it should look familiar to you. You've been using them ever since elementary school. It's a calendar. August 2025. The 1st, the 2nd, the 3rd, 4th, 5th, 6th, blah, 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 blah. Today is the 21st, right here. Now, this is an EX dividend calendar. It's just a little bit different. And you know what's different about this one? This one tells me when a company, a dividend paying company, is getting ready to pay their dividend. Well, what does that mean? Well, number one, a dividend is a portion of the company's profits they give back to the investors, and that's you and me. We are the investors. We buy the stocks. We own a part of the company. We are entitled to a portion of the profits. So out of the 10,340 different companies that we can invest in this week, next week it'll be a bigger number. Last week it was 10,321. This week it's 10,340. What's it going to be next week? Who knows? Anyway, so the calendar, I have it set for 20, see it right here? 25 years of increased dividends. So every little green dot you see on here represents a company that has increased its profits for a quarter of a century, 25 years. That's a quarter of a century. 25, I'm only looking for 20 years. So every one of these is on my list. Okay, what are they? Exxon Mobil, Schmuckers, Walmart, Emerson Electric, IBM, Festernal, Granger, 3M, Johnson & Johnson, McDonald's, Ben Franklin, Pepsi, Kimberly-Clark, so on and so forth, blah, blah, blah. Now, there's 12 months in the year, and each month looks very similar to that, which means next month we have another list of a bunch of different companies to look at. So here's the part where I tell you, how do I know when a stock is going to go up? Because most dividend stocks, good quality dividend stocks, have a tendency to go up in value just before they pay their dividend. So if I like Walmart, oh, here it is, Walmart. If I like Walmart and I want to get that dividend right there, I need to buy it before this date. That's the 15th, which means I can buy it the 14th, the 7th, the 30th, the 1st, the 13th, 12th, blah, blah, blah. Any day before this date. That is called the EX dividend date. There's 4 dates you need to remember when it comes to dividend stocks. First one is the announcement date. Hey everybody, my name is James. This is how much money we made this year, and this is what you're going to get and when you're going to get it. It's the announcement date. They tell you how much they made and when you are going to get your share. That's the announcement date right here. Look, dividend announcement date. The second date, this is the most important one. The EX dividend date. EX dividend date. The last day the stock trades before the dividend is paid out. Now, why is that the important one? Because if you want to collect the dividend, you got to buy it before that date. You can't buy it on the date. You got to buy it before that date. Because see, the stock market is one of those fickle things. They have a timestamp, which means so-and-so bought it at this time on this day. So-and-so sold it on this time on this day. Everything's time-stamped in the stock market. EX date, last day the stock trades before the dividend's paid out. That's date number 2. Date number 3 is the date of record. That means whoever owns the stock on the date of record is the person that is entitled to the dividend. That means that's the person getting the money. Plain and simple. You own it, you get it. Date number 4. Payment date. That's when you're getting your money. 4 dates. Announcement date, EX dividend date, date of record, payment date. So, just before the EX date, I like to buy 2 weeks on a Monday. See, here it is right here. 2 weeks, 1 week, 2 weeks on a Monday. Now, the reason why I want to buy it on a Monday, because a Monday is the first trading day of the week. See? Monday, Tuesday, Wednesday, Thursday, Friday. So if I'm doing a weekly option, guess what? The most amount of money you're ever going to get on a weekly option is from Monday morning to Friday afternoon. That's it. Monday through Friday. 5 days. 9:30 a.m. Monday morning. That's where I buy most of my stocks. Now, unlike a lot of traders, I will buy at the opening. I really honestly don't care. Seriously, I don't. As you see me progress through the day, you'll say, oh yeah, why would I want to do that? Think about it. Now I could make more money if I sat in front of my computer and just waited for the right time to enter, waited for the right time to exit. Yeah, I could. But I would be trading my time for money. Yeah, I quit that 2 years ago. Good evening, sir. All right, so that being said, how do I know when a stock's going up? The dividend tells me. Here's Johnson & Johnson right here, the 26th. If I like Johnson & Johnson, I'm buying it 2 weeks, 1, 2, on a Monday, right there. I'm buying it on the 11th. Because if I buy it on the 11th, I can do a covered call, get 1%. Maybe I'll make it, maybe I won't. If I don't, I'll do it again. Grab another 1%. So that's 1%, 2%. If I don't hit my target, I'll do it again. 3%, 1%, 2%, 3%, and the dividend. Most people just get the dividends. Well, bully for you. See, sorry, I don't do that. I want weekly cash flow. Now, dividends only come around once every 90 days, 13 weeks. Think about it. Each quarter, January, February, March, April, May, June, July, August, September, October, November, December. Each quarter has right about 90 days, 13 weeks, 66 trading days. Now, if there's 10,340 different companies, half of them, well, 5,600, pay dividends. So you got 5,600 companies paying a dividend in a 90-day period. It looks kind of like this. Hold on a second. Look at that. 37 companies, 125 companies, 56, 36, 118, 50, 69, 49, 34. Look at all these. Look at them all. That's a lot of companies paying a dividend. Now, if a dividend is a portion of the profits the company earns, that's a lot of money to be made every single week. So how do you pick the right one? Remember, rule 1, never buy something you don't want to own for the rest of your life. That's number 1. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, weekly options only. And number 5, make sure all the numbers work. What am I buying it for? What am I selling? What am I collecting? It's all a numbers game. It either makes sense or it doesn't make sense. It's actually that simple. It either makes sense or it doesn't make sense. Let's keep on looking. What else do we have to look at? Now, ICE 17 wants to take a look at JEPQ. Wait a second. World You Want to Live In Girl wants to take a look at Devon Energy and Schlumberger. DVN. Check that out. High, low, where was it? Where is it? Look at this. Down, up, sideways. We're at 33.89. The 34s are going for 64. That's almost 2%. Imagine that 1% a week is 50% a year. 2% a week is going to be closer to 100% a year. Can you imagine doubling your money every year? But does it make sense? Think about it. Does it make sense? It either does or it doesn't. AMC. Ben wants to take a look at AMC. He is only reading off his grinder. Hey, Down syndrome, Jesus. ¿Qué pasa? Well, I always love turds. I really do. Turd number 1. Bye. All right, anyway. So, do you like Devon Energy? That's the question. Do you like it? Is it a company you are willing to invest in? Let's take a look. A year ago was the high of the year, 46.09. The bottom of the year was Second week in April, TDS right there. You'll see that on almost every single stock. The second week of April. Okay? Stupid man in the big chair says tariffs, everybody panics and everything drops. Guess what? That was like 1, 2, 3, 4, 5 months ago. Guess what? Hate to be the bearer of bad news for those of you who dislike the big man. World hasn't ended yet, has it? Okay, TDS right there. He said something stupid, people panic, it dropped. Well, now it's going back up again. Almost everything's going back up again from this day. Anyway, last 30 days. What do you think? Up, down, up? What do you think? You think it's keep going up? It could very well be, but before you think of jumping in, take a look at this. Okay? 31.60. 34.20. 31 and 34. That's $3.20. Now, it doesn't sound like a lot, but $3.20 is 10% move. 10% move. Okay? 1 week, 2 weeks, 3 weeks, 3 weeks, 10% in 3 weeks. Think about it. 10% in 3 weeks. Now ask yourself an honest question. I don't care if you lie to me or not, but don't lie to yourself. If you bought it here at the bottom, it jumps up 10%. Do you keep it? Do you let it go? It's a serious question. Okay, if you bought it here at 31.60, it jumps up 10% in 3 weeks. Do you keep it or do you take that profit? Well, here's something you may have never heard of. You may have heard it. Number one, it's not a profit until you take it. Number two, nobody ever went broke taking profits. Think about it. 10% move. Do you keep it? Do you get rid of it? Now, it does have more room to go because your high is right up here. We're here at 34, and the high is 34.40. Well, 1% of 34 is 34. Isn't that weird? 1% of $34 is 34 cents. So if we're here now, 33.80, 34 cents or 35 cents, whatever it is going to bring me up to 34.10, somewhere around here. Well, look where the high is right there. Do you really want to play that game? I don't. 10%, I'm out. I will wait 2 weeks for this thing to come back down again before I jump in. As a matter of fact, I'm going to write Devon Energy for 2 weeks from today. DVN, 2 weeks from today. All right. Anyway, let's keep on moving. Now, don't get me wrong. I already own some Devon Energy. I think I got it at 30, somewhere down here. Anyway, let's keep on moving. ICE wants to take a look at JEPQ. I don't know why. I don't know. Should I pick on him? JEPQ. JP Morgan NASDAQ ETF. I'm going to say no. The reason why I'm going to say no, ICE, I don't do monthlies. The numbers just don't work for me. I'm looking for a simple, safe, predictable, consistent 1% a week. You cannot get weekly income from a monthly optionable stock unless you want to sit in front of the computer and watch this thing all day long. Yeah, no thank you. I've already said no. I have no desire whatsoever to sit in front of my computer for longer than I have to. Well, right now I've committed to sitting in front of my computer for about an hour a day, only because I answer a lot of questions from a lot of people asking, what about this? What about that? What do you think of this? What do you think of that? So I have no problem with that, and I'm okay with it. But I don't want to sit there looking for, oh, time to buy. Oh, time to buy. No, no, thank you. No, no, no. Monthlies just don't work for me. If you like it, great. You do it. But guess what? Let's go take a look at JEPQ in a financial website. JEPQ. Now, when I say never, ever, ever buy a company that is not consistently profitable, this right here is Yahoo Finance. You can get your financial information any way you want. I like Yahoo Finance. I've been using it for 20 years, and I'm okay with it. So, what we're looking at now is historical data. Okay, I'm looking at the dividends only. And I'm looking at all the way back to 1993. How much dividends has JEPQ paid out? And have they been consistently profitable? ICE, you're going to love this. You ready? Here we go. Let's go all the way back to the beginning. There it is right there. June 1st, 2022. Yeah, 2022 is the first dividend JEPQ paid out. So what does that mean? That means this thing's only 3 years old. ICE, it's 3 years old. That's it. It's a toddler. Why the hell are you putting your money into a company that's 3 years old? Hold on. Let's take a look at the numbers. Because a company that is consistently profitable will pay out more and more and higher dividends. That means every single year, every single quarter, the number will go higher and higher and higher, hypothetically speaking. Now, remember where I said make sure the company's consistently profitable, and at night, someone is going to ask me about a company that's not consistently profitable. I'm going to say, what the hell were you thinking? Here it is. Are you ready? It's 3 years old. 37 is the very first dividend. 37. The second dividend is 34. I don't care where the hell you went to school, but 37 to 34 is backwards. Now, where I went to school, 38 is higher than 37, not 34. Okay, so first one, 37. Second one, 34. That's backwards. Let's keep on going. Okay, 34, 40, 56, 38. Hold it. 38's less than 54. Is this a trend? Up, down, up, down, up, down, up, down. What the hell is that? ICE, did you even look at these numbers? This is a dividend. A dividend is a portion of the profits they pay back. If you invest in a company, you're getting high, low, high, low, high, wait a minute, high, low, high, low. So that's down, up, down, up, down, up, down. And that's not even the first year. Okay, where were we? 44. 43, down, up, down. Down, up, down, up, down, down. Hell no. What the hell were you thinking when you committed to put your money into JEPQ? Okay? Up, down, up, down, down, down. No, hell no. When I say consistently profitable, it's 1, 3, 5, 9, 11, 15, 19, 23, so on and so forth. Every single number should be higher and higher. Not up, down, up. You know what? Forget it. JEPQ's a no. I don't know how many times I got to say no, but no. All right. Next, Schlumberger, SLB. Ooh, check that out. High, low, where was it? Where is it? Sideways down, up. 3381. The 34s is going for 55. That's more than 1.5%. It's simple. It's not that difficult. It takes you 3 to 4 seconds. You ready? High, low, was, is, sideways down, up. That's less than 3 to 4 seconds to see whether or not it qualifies for my attention to look further. Very first thing I want to see is that. It's either yes or no right from there. Once you look at that, it's this little area right there. And it is in an upward trend at this moment in time. Now, here's the bottom of the year here. Okay, sideways, down, up. Not that difficult to see. Now, is it? A year ago, Schlumberger's at the high of the year. We got a double high, as a matter of fact, 46.16 back in August, and then again in October. The bottom of the year, TDS right there, second week of April, 31.14 right there, sideways, down, and up. Last 30 days. Ooh, before we go that, look at the 90 days. This is the last 3 months. 90 days, 3 months, just about. Okay? Up, down, up, down, up, down, up, down, up, down, up. Highs here, the lows here. It's got all this space to go right there from 33 to 38. That's a long way to go. So let's go last 30 days. Okay? What do you think? Up, down, up. Isn't that lovely? Here's your 30-day bottom right here. Now it's going up. We have all this space. Here's the high. Here's the low. We're right here. We got all that space to go right there. That's a long way to go. But do you like Schlumberger? That's a big question. Do you even know who they are? Do you even know what they do? Well, just to give you a little tidbit of information about SLB, they're over 100 years old. They have consistently increased their profits for more than 5 decades. That means they made more money this year than they did last year. They made more money last year than they did the year before, and so on and so on and so on. 5 decades. That's a long time to be consistently profitable. Do I want to put my money into a company like this? Hell yeah, I do. Is it the right time? Well, it sure looks like it. Here's your 30-day high, your 30-day low. Profit taking. Now it's going back up again. You can call it whatever you want. Retracement, correction, downturn. Call it whatever you want. I like to call it profit taking. Because once you're up here, now I'm taking my profits and it goes back down to the bottom. Regroups. Now I want to go back up again. Great. Let's look at the numbers. We're going to look at the 34s. Here we go. Just one contract. The reason why I do one contract, it makes it easy for everyone. Because if you know how much one costs, well, you know whether or not you can get 1, 5, 7, 12, 16, 83. I don't know. We're all different. We all have different goals. Buy one covered call Schlumberger 129 August next week. 34 call SLB at the market to open. To open, here's the profit, $76 at 3,300. Well, let's do the math. If the maximum profit is $76, the cost of the trade, including commissions and fees, is $33.24. So let's see what kind of rate of return that is. And it's always the same mathematical problem or the mathematical equation. You take the calculator, come on. $76 divided by the cost of the trade, including commissions and fees, $33.24, $33.24, grand total of 2.28. That is 2 1/3%. 2 1/3% for 1 week. Now you do know 1% a week is 50% per year. 2% a week is over 100% a year. Well, 2.28. Well, that's more than 100% a year. But does it make sense? I'm going to write Schlumberger down. 2.28. Yeah, I do write stuff down. It keeps me on my toes. What was the last part? Emma Shea, how you doing? Understood. Thank you, Kid Hundo. Now, Kid Hundo, I don't mean to pick on you in any way. I mean, you're here for a reason and a hope. Now, I don't want you to listen to me blindly. I expect you all not to listen to a damn word I say. Research the information yourself. If I say something, do the research. Am I right? Am I wrong? Am I blowing smoke? What's what? But when it comes to a stock, you have to ask yourself some hard questions. Number one, does it make sense? Number two, do I like this company? Number three, do I like this company at this price? Am I willing to hold on to it, regardless if it drops like a rock? Anyway, next, we're going to jump over to this side. Now, we did questions over here. We're going to go over here, do questions over here for a little bit. DuPont, where we looked at. Nick, sir, how are you doing? All right, what do we have over here? What do we have over here? Over here. Over here. Hey, the dividend guy. KLR, how are you doing today? Ralphie, Trump is on the list. Never forget, never give up, never give up, never surrender. ENB, Enbridge. Wait a second. Didn't we talk about Enbridge a while ago? ENB, Enbridge, Enbridge. There it is, Enbridge, right there. Oh, there's the dividends right there. Look at that. Ooh, lovely. Now, what was it about Enbridge that we didn't like? There was something. Let's get out of that. 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 And let's put in Enbridge. ENB. ENB. That's what it was. It's a monthly. I don't do monthlies. The numbers just don't work. Sorry. Numbers just don't work for Enbridge. Okay. Sorry about that, big brain. I remember you asking that before. Dividend and string like bull. I have no idea what that means. KLR, 1% a week. Yep. Gilmer D. Oliver, can you go over stocks trading at a premium of NAV and MNAV? What the heck is NAV? And that's never a good sign when I have to ask, what the hell is this? Well, NAV, NAV, has no options, so that's a no right off the bat. Okay? MNAV, what the hell is that? MNAV. Well, can't find that symbol, so that's going to be a no also, unless there's something now missing here. SPX, same-day expirations, use 15-minute structure with a 2 minutes HH or LL. That's it. Daniel, I'm going to say no. Only reason I'm saying no, Daniel, is that's not what I'm looking for. Okay? I'm looking for simple, safe, predictable, consistent 1% per week. Don't get me wrong, what you're saying does make sense and it does work, but not for what we're doing here. Now, Sodi wants to take a look at Nvidia and Google. Well, I'm going to say no to Nvidia, NVDA, for a couple of reasons. Number one, look at the high right here. It's at 175, but that's not what I dislike about Nvidia. Hold up. Let's go to Yahoo Finance. NVDA. Okay, this is what I dislike about Nvidia. You ready? Nvidia, NVDA, historical data, dividends only. The stock is $175. $175. Take a look at the dividend. 1 penny. 1 penny. That's it. Hold on. It actually gets worse. Now we're going to go over here to the summary page. Give us just a tad bit more information of why the hell I don't like Nvidia. Nvidia is not a dividend stock. It's not a cash flow producing stock. It is a, what do you call it? It's a wealth accumulation. No, that's not it either. I forget the name of it. Okay. Here we go right here. Earnings per share, $3.10. That's not a whole hell of a lot now, is it? This is a number I want you to look at. The forward dividend and the yield. 0.02. I'm going to repeat that for those of you in the back who didn't hear me. Okay, the rate of return or the yield on Nvidia, 0.02. Not 1%, not 1/10%, but 2/100%. 2/100 of, do you understand what that means? 2/100, hell no. Okay, it's not a cash producing asset. No, I just don't like Nvidia. Google's going to be the same way. GOOGL. Okay, let's take a look. Google. You like it? Fine. Let's see what the numbers look like. So I'm a numbers guy because 1 + 1 is going to equal 2 no matter where you come from. Okay, Alphabet. $1.99 a share. Earnings per share, $9. Dividend, 0.84. 0.42%. 0.42. It's not even 0.5%. Not even, and that's for the year. That's not a week, a day, a month. No, it's for the year. Not even 0.5%. Here's that point where I say, what the hell are you thinking? Seriously. You like Google, Nvidia, fine. I'm not here to tell you what to do. Really, I'm not. I'm here for my children and my grandchildren, so hopefully when I'm gone, they'll have something to look at. Hi, guys. How you doing? Hope you're doing well. That being said, seriously, dude, why are you putting your money into Nvidia? It pays 0.02. 0.02 for the year. And then Google, 0.4. That's not even 0.5% for the year. You do realize inflation is like 3% now. 3%. And you're getting 0.4? Do you understand the difference between 3% and 0.4? Anyway, SPX. Daniel, are you serious? Do you check out numbers also? SPX. Same thing. Let's take a look. It's not giving me the chart, not giving me any information on SPX. Now this is Yahoo Finance. SPX should be in there. Oh, it's still loading. Oh, volume not available. Nothing's available on SPX. So why the hell would I want to invest in it? Well, imagine that. I'm going to say no to SPX. SPX, what's the chart look like? Oh, hell no. $6,000 a share? What the hell are you thinking? Look at it this way. You got that much money where you're buying enough of this to make it worth your while. Look at it this way. I can buy a $20 stock and get 1%. I can buy a $6,000 stock and get 1%. Now, a $20 stock, it can drop to zero. Yeah. $6,000? Yeah, no. I don't do stocks over $300. That's $6,000. Hell no. Damien, you have fun with it. Cooper, what's happening, Cooper? Wow, this is the first time I've seen someone on TikTok understand how retail traders have the best chance of making nice work. Thank you. Thank you there, Cooper. GB for Liberty. So I just liquidated a big gain and need a new investment. Love your opinion. Okay, thank you. What software are you using? Okay, Nixer. This is not software. This is a trading platform. Wherever you trade, Fidelity, E-Trade, Charles Schwab, what's that other one? Robinhood, Webull, whatever trading platform you, that's all this is, just a trading platform. It's no special software. I just like it because I've been using it for a long time. Did I do the target play? No, because the target play didn't show up until after Monday. So let's take a look at target. Here's the play he's talking about right there. Okay? Here's the high a year ago, dropped sideways. Now we're at 97.06. The 97, we were looking at the 97s. That's going for 195. That's over 2% for target. What's the play he's talking about? This one right here. Okay? Here you go. Here's your last 30 days. Up, down, up, down, up, down. Now she's going back up again. With a big gap down like this and all that volume, yeah, this baby's going to bounce up. But I want 2 days to the upside. The bottom's right here. Today is 1 day. So I want 1 more day. And then on the third day, which should be Tuesday, hypothetically speaking, then I might jump in on Tuesday. See, I'm very strict with my trading because I'm about to start a hedge fund. And I got to stay consistent with my rules. I want the bottom, 2 days up. On the third day, I'll jump in and go for that 1%. It happens every week. I do it consistently. All right, next. So we're keeping our eye on it. La 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 la. Jerry, you want the stock to be assigned? Sometimes yes, sometimes no. Oliver, what is the stop loss for those weeklies? Okay, Oliver, I don't use any stop losses whatsoever. Remember, rule number 1, never buy something you don't want to own. If I want to own it, that means I understand that this could be the high, 108. This could be the low, 94. Am I going to panic about that? No. Never buy something you don't understand, which means you should know what the 52-week range is. What's the high of the year? What's the low of the year? What's the difference? What's the difference between the high and the low? Let's go back to target for a second, all the way back. Okay, so the high of the year is right around 170. The low of the year is around 90. Now, I don't know about you, but 170 to 90, that's an $80 drop. That's almost a 50% drop. Okay, 50% drop. If you're not okay with that, you shouldn't be playing this game. Seriously, you shouldn't. If you don't know the high, the low, the difference, and if you're not okay with that, you shouldn't be playing. It's a game, just like Monopoly. 4 greenhouses, 1 red hotel. Go around, collect $200. It's all the same. It's a game. You learn the rules. You align the rules to have the odds and the probabilities in your favor. You either like target or you do not. And guess what? I don't buy anything with the intention of holding it for years. I have 2 intentions whatsoever: consistency of profitability and weekly options. If it's right here, right now, down, up, down, up, down, now she's coming up. Do I like target at 97? If I buy it at 97, right, I'm going to sell someone the right to buy it from me at 97. Isn't that weird? I'm going to buy it at 97, and then I'm going to sell it at 97. That makes no sense, does it? Hold on. Let me explain. All right, let's get rid of this. Whoops. Okay, need the glasses for this one. Covered call, come on down. There it is. The 97s. Remember, if I'm buying it at 97, I'm going to sell it at 97. There it is right there. 1 contract. 1 at the market. There you go. And here's Johnny by 1. Covered call, target 100s. That's the weeklies, 29 August. That's next Friday. $97 call, target the market to open. 2 trades. Buying stock, selling the option. Stock trade goes to New York. Option trade goes to Chicago. CBOE, Chicago Board of Options Exchange. That's where you find all your weeklies. Chicago Board of Options Exchange, CBOE.com. You want to find out who has weekly options? There you go. All right. Profit, 192. Cost of the trade, including commissions and fees, 9,500. Hold on a second. If I'm buying it 97.06, I'm selling it at 97. Okay? Number one, do I like Target? Do I like Target at this price? Well, you can like them, you can dislike them. Don't really care. Target is a dividend king, which means they have increased their profits every single year for over 5 decades. Like them, don't like them, really don't care. You can't argue the numbers. They are consistently profitable for more than 5 decades. Okay, so if I'm buying it at 97, selling at 97, I'm going to make 192 bucks for every 9,500 I put in. Now, think of it this way. Okay, I'm buying it at 97, selling it at 97. I'm putting up 9,500 bucks. Guess what's going to happen come Friday? If it's above 97, I'm getting all my money back. I get to keep this, and guess what? Oh, shit. Now I got to try to spend that money again next week. It's a burden. It kind of is. So if I make my 1%, great. I get all my money back. Now I got to find some else place to put it. Tragedy, isn't it? I make 1% every week, and every week I got to figure out how to spend money. Invest money. Sorry. Need to invest it. All right, so let's do the math, see where that comes up to. Calculator, clear that. 192 is the profit. Divide that by the investment, 9508. 9508 comes a grand total of 2.01. 2%. Imagine that. Can you imagine getting 2% every single week? That's doubling your money in 12 months. That's doubling your money every year. How often do you do that? Double your money every year. But it's Target. Hold on. You want to see something really cool? This cost of trade, including commissions and fees, 9,508. That's if it's an all cash account. What if it's margin? Now, do you understand what margin is? Margin is you put up $1,000 and the broker will put up $1,000. Hey, we'll match you. So I put up 1,000, they put up 1,000. Now I have 2,000 to play with. Well, if I put in 100,000, they're going to put 100,000. Now I have 200,000 to play with. But that 100,000 is not mine. I got to borrow that. I got to pay money to borrow that. What does that mean? If I'm wrong, I'm going to lose. So never, ever, ever do margin unless you understand the risks involved. You're borrowing someone else's money. But hold on, I've been doing this for over 20 years, so I really don't mind. I will borrow money all the way up to 20%. I really don't care because I consistently get over 1% every week, which is over 50% per year. If I'm borrowing money at 20, I'm making 30. 30 on money that's not even mine. And I got to pay 8%. So I'm walking away, what? 22? I'm okay with that. 22% free money. Why not? All right, anyway. So let's do the calculations using the margin. Buying power effect, 4,655. So that ROI is going to look a little bit different. Hold on, let's take a look. Calculator, because the profit's the same. 192. Because the trade doesn't change. Nothing in the trade changes at all. It's still 192. It's still this. But instead of all cash at 95, I'm only putting 46 in margin. 46 right there. So profit's 192. I'm going to divide that by my cash requirement in a margin account divided by 4,655. It gives me a grand total of 4.12. 4%. I'm looking for one. This is offering 4. 4% a week, that's over 200% by the end of the year. How much time does it take? 10 or 15 minutes. It's not that difficult. Come up with a stock list. We got a pencil and paper? Here it comes. Dividend Kings. 5 decades of increased profitability. That's a half a century. Dividend Aristocrats. 25 years, a quarter of a century of increased profits. Dividend champions, 25 years of increased profits. Dividend contenders, 10 to 24 years of increased profit. And then guess what? For the fun of it, consolation prize, let's come on down. Let's take a look at Warren Buffett's list. Let's peek over his shoulder. What are you doing, dude? It's good enough for Warren. It's good enough for me. If there are other traders that you like, if you like some really good quality ETFs, well, go into the ETF. What are they buying? What are they selling? Well, if it's a good ETF, why not take a look at what they're doing? Pick a good company that you're willing to buy, willing to hold for your rest of your life or until it hits your target. This 97.06, I'm selling it for 97. What's my target? 97. What did I buy for it? 97.06. Do you see the flaw there? I'm buying it at 97.06 and I'm selling it for 97. I'm losing 7 cents a share. Not really, because I'm walking away with this per contract. And maybe I can do 10 contracts. Maybe I can do 20. So if I do 10 contracts, that's not $192. That's $1,900 if I do 10 contracts. I can live comfortably on $1,900 a week for 5-10 minutes of work. Why not? But do you like Target, TGT? That's a big question. What companies do you like? Somebody wants to take a look at AGNC. John, I'm going to disappoint you really bad, John. Now, I'm going to apologize now because I'm going to disappoint you. Are you ready? Here we go, John. I used to like AGNC, but now I don't. And the reason being, you ready, John? Check this out. Okay, here's all that. Okay, fine. I really don't care. 960, great. The 950s are paying 19. Well, that's good. But 1 strikeout, 0. 2 strikes out, 0, 0, 0, 0, 0, 0, 0. So you have to be exactly right. If the stock goes down, guess what? You get nothing. Energy Transfer is the exact same way. Whoops. I oopsed. Energy Transfer, same way. 3, 1, 0, 0, 0, 0. Yeah. When the option premiums look like that, it's a hell no. It's just not financially worth it. Because guess what? You're not always going to be wrong. The stock may go the wrong way. And if it does, you may have to adjust whatever strike price you sell. Because remember, what never, ever, ever changes is the price you buy it for. So whatever price you pay, that never changes. But what does change is this crap right here. And that's me and you doing that. Nobody else does that except for me and you, the buyers and the sellers. We say what's too high and we say what's too low. We keep buying, stocks go up. We start to sell, stocks go down. It's exactly that simple. And the strange thing is, adults have a tendency to make this more complicated than it really needs to be. Because it was created for my 9-year-old daughter back in 2008. Daddy, what are you doing? Can you teach me? It was a defining moment in my life. It really was. Okay, because my daughter was my shadow. We went everywhere. We did everything together. Of course, until she hit 13, and then I'm the devil ATM. Okay, for those of you who have younger daughters in their 12, 13, 14, 15, yeah, they're crazy right up until they're 25. So from 13 to 25, some alien possessed my daughter. See, now she's 26. So now we can have regular, normal conversations and we interact as a father-daughter scenario nowadays. But when she was 13, 14, 15, 16, nope, I was the walking ATM devil. Anyway, let's keep on going. What do we have next? Johnny, what do we have? Not at all. Kev, don't know what that means. Bolsa. Hey, Unc, what are we full porting? I have no idea what that means. Is AGNC a good stock? Now, see, John, we already talked about that. I don't do AGNC because the numbers are horrible. Depends. McKee, okay. Onyx, what's going on? Bob, hey, what's up, buddy? SPY. Okay, YG, I think we did SPY earlier. It's a big fat no, they're not consistently profitable. And I don't buy anything that's not consistently profitable, okay? And I definitely don't do stocks over 250 bucks. Once in a while I will, but not, for the most part, no, I don't. Noob. P-S-E-N-G. P-S-E-N-G. What the hell is that? P-S-E-N-G. Nothing's coming up, dude. Sorry. Hey, I started following yesterday. Jimmy, how are you doing today? What do you think about SPY? Holy shit, didn't I just say I don't like SPY? Alrighty. All right. SPY. Just for you, Jimmy, because you're new here, I'm going to disappoint you right away. Are you ready? Here we go. Historical data. SPY, $635 per share. Dividends only. You ready? Say historical prices. Dividends only. Now, I want to look at all the dividends. Come on. Here we go. Whoops, try it one more time. Yeah, right there. Okay? Give it a second, Jimmy. Here it is right here. You ready? Now watch, Jimmy. I don't like SPY, and this is the reason. We're going to go all the way back to 2005. You ready? 2005. There it is right there, 2005. Very first dividend, 46. Okay, you ready? 46, ready? Higher, 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 lower. Higher, 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 lower. Let's keep going up. Higher, 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 lower. Higher, 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 lower. Do you see that? It goes up, it goes down. They call that the Wall Street Shuffle. 3 steps forward, 2 steps back. 4 steps forward, 2 steps back. Sorry, I don't like spiders. Higher, lower, higher, 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 lower, higher, 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 lower. Consistency of profitability. The numbers get high. Hold on. People learn by examples. MSFT. You ready? Here we go. Ready for this, Jimmy? Here we go, Jimmy. All the way back to 2005. You ready? Here we go. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Jimmy, did you notice every single number was higher and higher and higher and higher? Every single year, Microsoft is more profitable than the previous year for more than a quarter of a century. That's 25 years. That's more than 2 decades. Consistency of profitability. Now, who's this one? Peverly, Tesla. Now, I'm not investing in Tesla at the moment, but I'm going to soon. Now, they don't have dividends, so now here's my reasoning for Tesla. Okay, think about this. Okay, what does the boy do? Artificial intelligence, solar, tunneling, electric vehicles, rockets. What do you think? Seriously, think about it. Okay, humans can't live on Mars, robots can. Where's the electricity going to come from? There's no petroleum. Solar power on Mars. Electric vehicles, because there's no petroleum on Mars. Electric vehicles. A tunneling machine. Well, because humans are going to have to live underground, because you can't live on the surface of Mars. And what was the other? Rockets. How are you going to get back and forth? Think about it. In 200, 300, 400 years, who's the first one to colonize Mars? Tesla. You can't get away from it. Terribly sorry. So yeah, I'm going to have to try to figure out a way to start investing in Tesla because you can't get away from certain things. He's got everything wrapped up. He's got the rockets to get to Mars. He's got the solar company to produce electricity while he's on Mars. He's got electric vehicles that plug into the solar on Mars because there's no petroleum. He's got the tunneling machines to create tunnels, to create an a subsurface atmosphere down there. He's got robots to do all the work because they don't need to rest. They don't need food. They don't need anything other than a little bit of juice, which comes from the solar electricity. So he's got everything mapped out to eventually colonize Mars. He's got everything mapped out. The rockets, the solar, the electric, the robots, the tunneling machine. What is he waiting for next? He's just progressing. He's like getting everything ready to put together. You cannot deny what is coming. You can't get away from AI. You can't get away from robots. You can't get away from a lot of things you can't wake up. And this guy get all 5 of them put together because he's got a goal. Yeah, I don't invest in a Tesla at the moment because he doesn't have any dividends. He doesn't share his profits, which means I don't know when the stock is going to move predictably, other than looking at that stupid damn chart. Where is it? TSLA. Okay? Up, down, sideways. Now, if it doesn't have a dividend, how are we going to know when does it move predictably? Well, guess what? We have what's called a seasonality chart. And if you don't know what a seasonality chart is, you're in for a treat. Here it comes. This here is what's called a seasonality chart. January 1st is way over to the left. December 31st is over here to the right. It's one whole year at a time. The blue lines, that represents the movement for this year. The red line represents 10-year average movement. So can we invest in Tesla on a predictable fashion? Maybe we can using this. Because look, kind of goes sideways here. That's great for covered calls and spreads. It's going up here. Well, it's going up, a little pullback, up, a little pullback, up. Oh, great. It tells us what it's doing consistently over the last 10 years. Now, is that 100% accurate? No, but it's close. Okay, so if from May to August is a nice upward trend, then it pulls back a little bit, then she shoots up again. Where are we now? We're right here. Okay, so if I'm going to click right here, drag it this way to the next peak, okay, this is where we are, right here. This is today, that little blue dot. Well, this is historical performance. What does it do? Slow upward trend to the upside for the next month, for the next 2 months. But it comes down to, do I like Tesla? Am I willing to buy it and hold on to it until it hits my target? Well, right now, current price is 320. Which direction is it going? Let's get out of this. Here's your last 30 days. Down, up, down. So guess what? Here's the bottom here. This is not as low. See, this is 1 day higher, but it's coming down. How far down is it going to come before she finds a bottom, turns around, goes back up again? I don't know. Am I comfortable buying Tesla? To be 100% honest, not yet. I'm getting closer. Now, I prefer companies that have dividends, but I cannot escape what Tesla is doing. You can't escape it. He's doing what he's doing, and he doesn't give a rat's ass about what anyone thinks about what he's doing. He's got enough money to do whatever the hell he wants. And if he wants to colonize Mars, he's off to rockets, solar, electric propulsion, robotics, and a tunneling. What does he need next? It's kind of interesting and fascinating to watch what this guy does because he's young enough to be around for another 10, 20, 30 years. Think about it. what is he going to do in the next 10, 20, 30 years? If he colonizes Mars, he's going to go down he's already going to go down in history. Who else puts a car in space? He put a car in space. It's just floating around up there. Anyway, let's keep on going. MSTR is going to be a no. Sorry, Oliver. MSTR, same thing. No dividends. It's going to be the same boat as Tesla. Now, Tesla, I will invest in at some point when I reach the point where I can't avoid it anymore. Holy cow, we got a half hour left. Let's keep on going. Mara. Who's that one? Oh, Kellogg Heat. Oh, Kalo got heat. Is that it? Kalo got heat? It's a weird name. All right, Mara, M-A-R-A. M-A-R-A. Now, I do own Samara, just in case you were wondering. Let's take a quick look. High, low, where was it? Where is it? Look at this. Up, down, up, down. So it's coming down at the moment, so no. Okay, 3 to 4 seconds. It's a no, because here's the top. Now it's coming down. I'm going to look for a bottom here. When I find the new bottom, then I'll jump in. Okay, here's a bottom yesterday. Today is 1 day to the upside. Okay, top, bottom, 1 day up so far. Just one. I want 2 days. And then on the third day, I will jump in if it's continuing to go up. Can you check NAV? Already checked NAV. It's going to be a no. What do you think about PRIM? To be totally honest with you, Bob, never heard of it. PRIM. Hell no. 2 reasons. Number 1, I don't buy at the high. And number 2, I don't even bother with monthlies. Not worth my time and effort. Okay, if you like PRIM, more power to you. I don't do it because I don't want to stare at this stupid thing all day long. Okay, I tried that before, like 20, 30 years ago. I tried day trading. I wasn't very good at it. It is what it is, right? Can you check? Okay, Oliver, we already checked MSTR, NAV. They're all in no. Okay, YGSPY, we already checked it. AMD, Advanced Micro Devices. Wait a minute. Doesn't AMD... Oh, well, it's going to be a no. Okay, high, low, where was it? Where's it? Look at this. Up, down, up, down. It's coming down at the moment, so no. So if you really like it, keep your eye on it. Up, down, up, down. It's going to find a bottom here. Here's 1 day. Here's right there. So it might be starting to go up. This could be the bottom here. This is 1 day to the upside. 1. I like 2. On the third day, I'll jump in. How about GILD? GILD. It sounds familiar. Gideon, something like that. Gilead. Yeah, right here. Pulling back right now. It's in a pullback at the moment. See, the top is right there. Here's the high of the year. Okay, it was here at 108. Jumps up to 122. We're at $6. Now it's coming back down again. Looking for a new bottom. Once it finds a new bottom, it'll turn around and go back up. Not today. Sorry. What else do we have? Can you do Prim next? Bob already did Prim. PRIM. No. Nico, where can you find company profits over time? Quarterly reports and annual reports. Or you can go straight to the dividend. Because if the profits increase, so do the dividends. Because the dividend is a portion of the company's profits they give back to the investors. Can I do ROP? Ooh. Oh, Landry, what ETF you in? I don't think any ETFs. I don't think so. I'll have to think about it. I get 7 different accounts. So off the top of my head, I don't know everything that's in all of them. There might be an ETF in there. I don't know. Beauty Style Grace. Good evening, Your Grace. Let's take a look at ROP. What the hell is ROP? It's a no is what it is. I don't do monthlies. The numbers just don't work. Okay? Sorry, kiddo. I'm looking for simple, safe, predictable, consistent weekly cash flow. I can't get weekly cash flow with a monthly option. Monthly options means it only trades once a month. No. Sorry. It's Ghoul. Remember me. No. Read chat. Just remember me. Okay, it's Ghoul. Thank you. Thank you for your input. We already did MSTR. It's going to be an I got 99. Good night. Holy cow. All right, I got to sit down and answer some of these questions. I got way too many of them sitting here. So let's check them out. Let's do this. Alrighty. What do we have here? All right, first and foremost, Melissa. How are you doing, Melissa? Simon, how are you today? Wild Clip. Do you ever sell more than one contract? Oh, hell yeah. I do 10, 15. I think the most I've ever did was like 150, 160 contracts. It's cyclical. Dano Clip, did you short calls on target? Well, Dano Connor, I teach and I give away one trading strategy and only one. Okay, at some point you need to ask yourself a question. Why is this guy giving away all this free information? That's it. I'm giving away free information. Simple, safe, predictable, consistent, 1% per week. If 1% or 50% a year is not enough for you, I don't know what to tell you. Okay? So I will answer any questions you want about the specific trading strategy that we're talking about. It's cool. You were here yesterday. Well, thank you for stopping by again. Daniel Jacob. But if you sold at the last low before the drop, you lose. If you sold before the last drop, you lose. All right, Daniel. I honestly don't know what you're talking about. I know what you're talking about, but I kind of don't know what you're talking about. If you could, Daniel, expand on what you're talking about. Because I get 6 screens in front of me, which means I have 6 different groups of people all asking me questions. So you may know what you're talking about, but I have no idea what you're talking about unless you remind me. So usually when I ask people to ask questions, make it so that it's easy to understand. But if you sold at the last low before the drop, you lose. I have no idea what that means. Okay? MSTR, we were talking about that. Ooh, Mario, UNH. Okay. UNH had an interesting scenario happen lately. UNH. Here's the bottom right here. She shoots up, and now she's pulling back at the moment. What are we watching? Joni, good evening, Joni, and how are you doing today? Joni, you watching me show people how to get a simple, safe, predictable, consistent 1% per week. Use nothing but qualified dividend stocks. Those are companies that consistently increase their profits for more than 25 years. Doing a simple, safe trade that gets 1% a week. That's a covered call just before the EX date. Hopefully that explained it to you. Bob, no on Prim. We already looked at Prim. No. Landry, Usoy. Now, Landry, when I say, what the hell is that? Usually means it's going to be a no. And guess what? It's a no. I don't do monthlies. The numbers just don't work. Roger wants to take a look at JP Morgan. Okay, unfortunately, Roger, we don't really have time to look at everything because I got 99 questions here and about 90 here. Okay, I'm done over here, done over there. YouTube, I don't really pay attention to because I need a moderator on YouTube. And there's a lot of trolls and silly childish children on YouTube. I'm not insulting everybody there because some of you guys actually have the desire to ask questions or learn something. It's just that I don't have a moderator on YouTube. And then I'm stuck looking at idiot after idiot. Good question, great question. Idiot, troll, good question, good. Yeah, it's tiring doing YouTube. It is. And I feel bad about that because there's 83 people there that genuinely want to know something. All right, Daniel, you have to explain that. What does that mean? Austin, good evening. Or even if you bought at the low. Daniel, I have no idea what that means. TD USA, keep for 10 years. No idea. I know what you mean, keep for 10 years, but what are we keeping for 10 years? Okay? Am I keeping my bottle of water for 10 years? Am I keeping my pen for 10 years? Am I keeping this crappy haircut for 10 years? What specifically are you talking about keeping for 10 years? JPM, love JPM, love Halliburton. Coinbase, no. Sorry, Joni, I don't do Coinbase because that has to do with cryptocurrency and I don't do cryptocurrency. Oliver, can you look at MSTR? MSTR, Oliver. There you go. No. It's on a big drop right here. Schlumberger oil field company. Okay. Be careful with Schlumberger. It's an oil company, and without digging oil prices, should be coming down. Okay. Julian, why are you called the 10-minute trader? I'm not the 10-minute trader. My 9-year-old daughter is the 10-minute trader. Because how do you teach a 9-year-old to invest in stocks? Okay, it had to be simple, safe, predictable, consistent, no way for her to lose, and be able to do it in less than 10 minutes. How do you keep the attention of someone who's in junior high school? It had to be simple, safe, predict in less than 10 minutes. So the trading strategy was specifically designed for a 9-year-old little girl to do it within 10 minutes. That's it, just 10 minutes. Honey, you brushing your teeth? Yep. Are you doing your trades? Doing them next, Daddy. Okay, 10 minutes. Let's keep on keeping on. CVX, isn't that Chevron? CVX? Uh-oh, I missed some of these questions. I gotta go backwards. Oh, wow. Hold on, Jay. Oh, wow. Holy cow, did I miss a lot? What ETFs? I don't do ETFs. NAV we looked at doesn't know NAV. I'm terribly sorry, dude, but if I put NAV in here, NAV, do you see what pops up when it says NAV? No options on NAV. Nothing's popping up. So no, if I don't know NAV, well, why would I need to know it? Think about it. Seriously, it's a serious question. I put it in the search, it's not coming up. So apparently it's nothing I need to know. Bro, it's not a symbol. It's a metric, net asset value. I'm not looking to buy net asset value. I'm looking to buy stocks. Okay? Now, I've done a lot of things in my life. I was a lumberjack. I was a fisherman. I was a lobsterman. I worked in a restaurant. I worked in a factory. I owned my own manufacturing company. I did a lot of things in my life. Every single thing that I have done has an acronym that goes along to it with it. Do you know what a SCIV is? Well, you should know what a SCIV is. Do you know what the proper amount of methyl ethyl ketone you add when the humidity is at a 97% and the dew point is at 6.3? You probably don't. So NAV could mean anything. It could be abbreviation for the Navy, for all I know. Okay, if you're going to ask a question, ask an intelligent one. Okay, net asset value. Well, then say net asset value. Don't ask me to look at NAV. I put up NAV, it doesn't show up. My assumption is it's a stock. Well, apparently it's not. Anyway, ask a better question. Thank you, 7762. But it's only 1% on what's invested. Can you be 100% invested? Yeah, I can, but I don't. Look at it this way. If I invest $100,000, 1% of $100,000 is $1,000. If I invest $50,000, 1% of $50,000 is $500. Whatever my investment is, I'm making 1%. However, if my account has $150,000 in it, I want $1,500 a week. Plain and simple. Nickel Ninja. Are you profitable as a trader? Is your full-time income? Yeah, my full-time income comes from my 1% on my trades. I don't make any money doing this crap. This is all, educational, and it's a video documentary for my children. I just figured, people want to know. You either want to know or you don't. You don't have to be here. Nobody's twisting your arm. It either makes sense or it doesn't. So Oliver, NAV, net asset value, MV, multiple of net asset value, MSTR. I don't like MSTR. I already told you that. Let's go over here. Okay. MSTR. Give it a second to populate. Here it is right there. Strategy, MSTR. There are no dividends in the time period selected. So no, I knew there was a reason I didn't like MSTR. Man, you should not be broadcasting not knowing what NAV is. And you know what you should do? You should kiss my lily white, anyway, whatever. Would opening in a Roth IRA with dividend stocks viable? Yeah, if that's what you want to do. Because in a Roth IRA, you don't have to pay taxes until you pay all the money out. Ben, do you have any credentials? Yes, I do. Pepper Pammy, IWM. What the hell is IWM? IWM. Oh, not there. IWM. Interesting. Oh, no. Sorry, I don't do dailies. This says dailies. I don't do dailies. Sorry. Why does dividends matter? Ooh, Ben, that's a good question. All right, Ben, you see this right here? Ben, this is called an EX dividend calendar. August 2025. We're here on the 21st. Now, each one of these little green dots, Ben, represents a company that has increased its profits for a quarter of a century. That's 25 years. So each one of these companies increased its profits 25 consecutive years. It means higher and higher and higher and higher profits every year. So why does it matter? Because if I want to collect the dividend, if I want to invest in NEE, which is Nextera, okay, I need to know a few things. Number one, are they profitable? Yeah. They wouldn't be on the list if they weren't profitable. Number two, they have weekly options? Yeah. Wouldn't be on the list if it didn't have weekly options. Number three, does the dividend that is coming make the stock go up in value just before the dividend date? Most dividend stocks, specifically the ones that have 25 years of increased profits, they have a tendency to go up in value just before the dividend. So if you know when a stock is going to move, that's valuable information. That's having odds and probabilities in your favor. So Ben, knowing when a stock is going to move tells me when to buy it. Okay, if the dividend is here, I want 2 weeks, 1, 2, on a Monday. That's when I want to buy Nextera Energy. 2 weeks before the dividend on a Monday. It puts the odds and probabilities in my favor. Is there an hourly paid dividend stock? Nope, not that I know of. Shoot! Can I make this interesting with $1,500 in my spare time? Yeah, you can. Just all depends on your approach, what you're looking for. Okay, Pepper Pammy, we just looked at IWM. It's going to be a no. Sorry. KB, what's going on? SPX is the S&P 500. Well, so is an SPY. ES1, no idea what that one is. Bro, looks like Tony Hawk, thank you. I missed it. What software did he say? It's not software, it's a trading platform. It's where you go to make your trades. Anyone else think this was Tony Hawk talking about stocks? Well, imagine that. Thank you. Sarge, are you talking about stocks in play? Some of them. Anna, for someone with zero market trading knowledge, with daily learning, how long to be profitable approximate? Okay, see, Anna, I don't want to be the bearer of bad news, but it took my 9-year-old daughter 15 minutes to understand it. Simple, safe, predictable, consistent, no way to lose. Number one, never buy something that's not on the list. Okay, the list, whoops, right there. If it's not on the list, it's an automatic no. Now, as of this week, there's 10,340 different companies. This list right here is Warren Buffett's list. These are all the stocks that Warren Buffett owns. If it's on his list, yeah, I'm going to buy it. What's my other list? Well, my other list is stocks that are over 100 years old. My other list is all the stocks that have 20 years or more of increased dividends. If it's not on the list, it's a no. That's number one. Number two, never settle a loss. Number three, is the company consistently profitable? Number four, weekly options only. And number five, make sure all the numbers work. You're coming out of retirement. Hey, Lemonade, how you doing? Ben, what are your credentials? I'm going to ask you the same question, Ben. Okay, so my credentials, okay, I went to elementary school. That means I can read numbers. Okay, I went to junior high, which means I can read dates. Okay, what are my credentials? I went to high school. I know how to add, subtract, and multiply. What other credentials do you need? How many trades do you take a day? I don't. I buy on a Monday, and I like to be out on a Friday. That's it. Why did Ray Dalio get in on Lyft premium close to 3%? Thoughts? I have no idea why Ray Dalio went in on Lyft. LYFT. Okay. High, low, where was it? Where is it? Look, it's up, down, up, down, up, down. Yeah. 1581, the 16s are going for 38. That's more than 2%. If, of course, you like Lyft. No, I don't, because they haven't been around for over 20 years. What if it's below? Okay, Anna, below what? Why not have a higher strike? Okay, Lemonade, it's always going to be what makes sense. If I'm buying the stock at 1581, I have two choices. The 1550, that's paying 62, or the 16, that's paying 38. Safest trade is the 1550. Safer is the 15. Even safer than that is the 1450. The higher up you go, the safer the trade. Also, the higher up you go, the lower profit. The further down you go, the higher the profit. The further down you go, the higher the risk. It's going to be a balance no matter which way you look at it. Are you looking for profitability or are you looking for consistency? I told you what I'm looking for. Safe, predictable, consistent 1% a week. I'm 61 years old. I've been working since 1973. I quit 2 years ago. 5 decades of working. I think I'm entitled to retire. I can afford to. I'm not looking for handouts from anyone. I can hold my own. Thank you very much. Okay? All right. Buff, what's happening? Peek over Nancy Pelosi's shoulder. They actually have some websites or some apps. They get some apps you can download to your phone, and you can follow all of the crooked politicians. I call them crooked politicians because they have access to information we don't. That is the definition of insider trading. Having access to information the general public doesn't have. That's the actual definition of insider trading. But it's okay for congressmen to have insider information and to vote on it. You ask Nancy Pelosi, is insider trading illegal? Yes, it is. except for us. Okay, what do we have here? Questions. Chris, UNC Spin Facts, thank you. Chris, oh my God, all righty. Can you do Prim? Bob, we already looked at Prim 3 times and it was still a no. HPQ, Hewlett Packard. HPQ, whoops, helps if I do this. HPQ, here we go. Whoops, there you go. Okay, high, low, where was it? Where is it? Up, down, up, sideways, 2658. The 2650's 99. That's over 3%, very close to 4. Do you like Hewlett Packard? Well, look at what it's doing. Well, let's zoom in a little closer. What's the last 30 days look like? Now, the last 30 days gives you a good idea of where do you think it's going next. Sideways down, up, down. Here's the bottom here. 30-day bottom, 30-day top. Do a little bit of math. 24 to 27 is a $3 move. Now, I know $3 is not a lot, but $3 on a $24 stock is more than 10%. That's a 10%, a little bit more than 10% increase. So yeah, profit taking has started. How far down is it going to go before people say, wait a second, that looks like a good deal? Juan Mendez, ¿Qué pasa, amigo? What about SBET? Never heard of it. SBET, never heard of it. SBET. SBET. Oh, hell no. How can you honestly say a stock at $1 or $2 a couple of months ago? How can you tell me that thing has 20 years of increased profitability? It was less than $5 a couple of weeks ago. Sorry. Shoot, if I'm only willing to use $1,500 towards this process, can it be done? Yes, shoot, it can be done. Ooh, Eric, Alcoa is at 3% for $29.50. Alcoa, I love Alcoa. Alcoa is on my list. Check it out. High, low, where was it? Where is it? Look at this. Up, down, up, sideways, $29.50. The $29.50 is at 83. That is over 3%. He's absolutely right. But do you like Alcoa? It's been in business for over 100 years. They have consistently increased their profits for over 5 decades. It's $29 a share. Is this pre-recorded? Yes, Anna, this is pre-recorded. See, that's weird. You're asking me, is this pre-recorded? And I'm saying, yes, this is pre-recorded. And it's not pre-recorded. Today is 10:55 p.m. Uh-oh. What the hell was that? 8:21. 8:21 is Thursday night, 10:55 p.m. I got 5 more minutes before I am done. So let's go some more questions and see how much we can get done. Let's go. Billy D, what's that? You need to research them. Jameson, that's what I tell everyone to do. Don't listen to a damn word I say. Do your own research. What I want you to figure out is, does it make sense? Okay. Mikey G, I need 37 on SLB. T-Deal, what's going on? Do you mispronounce names on purpose? Schlumberger Z and Devon. I don't know. I don't really pay attention to it. Sorry, T-Deal. Okay, Truth, Hewlett Packard we looked at. Thoughts on Amazon? They have never been profitable. Okay, they're not a cash-producing asset. They're not, cash producing. They have no dividends, and they're not looking to start dividends. So that's going to be no. I keep running into your video. Okay, cool. All right. I don't know how. All right, whatever. Shoot. Once I learn with paper trades, can I make this interesting with $2,000 in my spare time? Yes, you can. I know they don't to have dividends. So then why are we looking at it? Mario, we're looking at UNH. Chris, HD, Home Depot. We'll have to look at it next time. PDI, 14%. Cool beans. Bitto. Ooh, I did Bitto last year. Verizon, Drezik, another time. Layla, Riet. Real Estate Investment Trust. What about it? Mario, Chris, blah, 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 blah. It's a raw index. Thanks, Mikey. Do you ever sell more than one contract? All the time. Every single week. Very rarely do I sell just one. Drezik, with Target, what happens if you're under the strike by Friday? You roll it into next week. That's simple. What ticker? Okay, Stellar, the ticker we're on now is AA, which is Alcoa. Kevo, Intel, cool beans. Do you invest in any Chinese stock? Sorry, John, no. It's big money. Where else is he streaming? Ooh, big money. Are you ready? I got Zoom, got 3 YouTube channels, 2 TikTok channels, Instagram, Twitter, Rumble, LinkedIn, Twitch. I think that's it. I used to do Facebook, but Facebook only puts the videos up for 30 days. Let me get rid of it. Okay, Robin Merrickey, what are your credentials to trust you? Don't trust me at all. None. Absolutely. I have no credentials whatsoever. I graduated high school. I did what is called the School of Hard Knocks. Do you understand what that is? That means School of Hard Knocks. It means you do something stupid, you learn from it, you never do that again. And then guess what you do next? You do something else stupid. You learn from that, and you never do that again. Okay, you keep falling on your ass. You keep picking yourself up until eventually there are no more mistakes to make. Bry Guy, Ball Corp. Never heard of it. So, Robin, I hope that answers your question. Visar, good evening. Pete, he's the Antichrist. Grok told me his own AI said he was the best pick in off-the-wall guess. All right, whatever. Cool. Dividend versus total return investing. Okay, I have no idea what you mean by that. Dividend versus total return investing. All right. You need to explain that a little bit better because it's a little wishy-washy. Maina. V is Visa. That one I get. BLM. BLM. What the hell is BLM? BLM. I have no idea what BLM is. HD, we know what that is. Do you still have a loss on IBM? Nope. See, Mike, you're saying do I have a loss on IBM? IBM did go down from where I jumped in. I jumped in, I believe, at 285 up here. Okay, now it's down here at 239. I sold this week's 245s. Okay, now a loss is not a loss until you agree to take the loss. So if I bought it at 285, which I did, and now it's at 230, did I lose money? No, I only lose money when I agree to sell it for less than what I paid for it. MP, I have no idea what MP is. Let's find out. MP. Interesting. Okay, the top's there, now it's pulling back. No, not this week. Sorry, Newsmax. You got to give me the ticker symbol. I don't know who Newsmax is. Simone, what's happening? Laurie, good evening. Dino. How does EPS get measured? Are you serious? Serious. The way EPS gets measured is they find out, well, they already know, how many shares are there. So let's say hypothetically the company has 1 million shares. 1 million. Well, let's say this year they made $1 million. That's $1 per share. Earnings per share. If they have 1 million shares and they made $1 million, that's $1 per share. Okay. Jason, EURUSD. I don't do Forex. Sorry. La 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 la. What else? Altria, M-O. Yeah, let's take a look at it next time. What platform is that? Joel, that platform is Think or Swim. It is offered through Charles Schwab. So what if the stock never went up? Okay, if we're playing in La La Land, you tell me which stock you think never went up, and then we'll take a look at it. Matt, agree. Crooked. Matt, I have no idea what you're agreeing to. PRFX. What the heck is that? PRFX. PRFX. No options. No thank you. IBRX. What the hell is that? IBRX. It's another hell no. I don't do monthlies. I already said that. Ooh, we're at the end here. Eric. Here for education. Keep it up. Thank you, Eric. Matt. Thank you, Matt. Mina. I meant to ask where you get the dividend calendar from. Okay, so Mina. The dividend calendar is included in the trading platform, Think or Swim, through Charles Schwab. There's also EX dividend calendars you can get on Google. Just write EX dividend calendar in the search bar and hit go. Okay, Saitama, IBRX, we looked at that one. It was a no. Sorry. Can you explain the process of picking the correct option? Are you kidding me? Really? Forest, I'm going to say no. But Katamatu, all right, interesting name. Okay, Katamatu, are you ready? Here we go. How do you pick the right dividend? I can't believe, not the right dividend, the right strike price. All right. Katamatu, can you explain the process of picking the correct option? I can't believe you're actually asking that question. Seriously, I can't believe. You ready? Here we go. The big number on the board, 1294, 1294, 1294, 1294. Currently 1294. What is the closest strike price to 1294? 13. That's it. It's a scientific process on picking the right option. Stock's at 1294. The closest strike price to 1294 is 13. It's not 1250. It's not 10. It's not 15. It's 13. 1294, 13. That's it. Scientific. Alexander, can you do a class on how to populate the calendar on Think or Swim? Oh, that's easy. All right, you ready? Alexander, you ready? Right over here. Watch list, right there. The very next square next to watch list. You click on that right there. Okay. Window opens up right here. And this one right there, it says create watch list. This one opens up. So I'm going to click right there. And then I'm going to put, there you go. There's the name of it. See it right there? And then I'm going to input some symbols. Ready? Here we go. Let's put some symbols in there. You ready? T, AT&T, F, Ford, D, Dominion, DD, DuPont, MSFT. What else we get? IBM, KO, Coca-Cola, Pepsi, PEP. Okay, it's easy. See, you just put them in there. Then you hit this one right there. Save. All right. Now, let's come back over to here. Market Watch, calendar. Now, come right here. Okay, personal, because I just made it just now, and there it is right there. Whoops, right there. See it? That's the one I just made. Whoops, not that one. Damn it. That's the one I just made. Oh, look at this. IBM, Ford, Microsoft, DuPont, Dominion, Pepsi. That's the trade. That's the one I just did. Now, this is being recorded. So if you didn't quite grasp that, go to YouTube in about an hour or so and watch the replay. All right. Now, to get rid of it, I'm going to go here. Okay, back over to here. And I'm going to come over to here where it says delete. And I want to delete this one right here. Are you sure? Yep. Boom. Now it's gone. See, it just disappeared. Okay, hopefully you got that one. All right. We're past 11. I'm done. Weren't you in the Breaking Bad? No, I wasn't. I was in a couple of movies, but it wasn't in that one. Alexander, thank you. Turn the camera to the left. I'm just about done, so we can worry about that one later. Thanks. You're welcome. Okay, so keep running into your video. Yep, I got that one. All right, done, 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 done. Great, what do we have over here? Finally, he got banned. Yep, go out and touch the grass, nerd. All right. Dylan, how's it going, Dylan? Did I buy today? Yes, I did. This guy's a great teacher. Thank you, I Hero. That is why I came back. Thank you, Dylan. I Hero. I use my margin money to make swing trades. I don't blame you. I do the same thing. Tim, good evening. All right. What do we have over here? Buy puts. I've got 200,000. Nico, good for you. Anna, good evening. Well, what's your answer? Anna, you have to ask that question one more time because I'm not seeing your question here. I locked in on this now. I'm locked in on this now. Always chat where who should I start watching, and I want to learn about trading with zero foundation. Anna, ask and you shall receive. Matthew 24. Seek, you shall find. Knock, and the door shall be opened unto you. Simple. Ask. That's it. So, Anna, keep coming back. If you want, drop your number down. I'll give you a call and we can chat. And I guarantee you I will not. Live restricted for some audiences. Submit feedback. Live does not contain anything you mentioned. Submit. There we go. What platform is that? It was Thinkorswim. Sooner on TikTok, blah, blah, blah. Anna, blah, blah, blah. Thanks, you're welcome. Buy puts, blah, blah, blah. Okay, well, what's your answer? Okay, hopefully, Anna, you got my answer. Buy TSL, get the dividends. Yep, terribly sorry, dude. I'm going to disagree with you, Nico. The reason I'm disagreeing with you, Nico, you need to go in and take a look at all the dividends that they have paid out. Have they increased consistently? And if so, how many years? Nico, Tesla's a great investment. TSLY gives you monthly dividends. Yes, I'm aware of that. What do you think about IBRX? Satima, we'll have to take a look at that one next time. What? That's why you average in. All right, Nico, thank you. Buy TSLL and make more. Okay, thank you, Nico. You all should buy. Okay, thank you, Mauer. Just saying. MSFT, we looked at that one. Anna, wait for the pullback. It's coming. May, June was golden, and now the average Mag 7 and VO. I'm going to disagree with you there, if you don't mind, Nico, because I'm looking for consistency of profitability of 2 decades. VOO doesn't have it, and Mag 7 doesn't have it either. All right, Burry, what's on IBRX? Amazon, nope. What platform? We already did that one. Thinkorswim. IBRX, already said no to that one. Already said no to that one. CMG, is that Chipotle? CMG. Fannie Mae, we'll take a look at that one. Next, Osris, SoFi. Again, go look at the dividends and see how consistently profitable they are. Resilient, V-Wave. Yep. Fannie Mae, V-Wave. Did you talk about BTAI at all? Just got here. No, Buttercup, doesn't fit. Do you always shoot for 1.5% premium? No, Jarf, I'm shooting for 1%. 1% every week is what I'm looking for. All right, Merv, how are you? Fiserv, not Pfizer. You gotta give me the ticker symbol. How does a put trade work? Merv, I'm not even gonna go into puts. I give away one trading strategy and only one. All right. Beauty, thank you. Beauty by Grace. All right. Good evening, sir. Gene, thank you. Eric, give us a yes that is a dividend king. Yes. Schlumberger was a yes. That's a dividend king. Fannie Mae, V-Wave. Eric, what's going to be your strike price when to sell calls for IBM this week? Oh, that's a good question. IBM. Probably the 145s again. Oh, sorry, the 245s again. Probably. BTAI. Tomorrow, next time, that guy, Hood. Fannie Mae, Hood, Robin Hood. Connor, what did you do before you had enough money to invest in stocks? I aspire to have money for stocks. Okay, I started out with $12,000 back in the 1990s. No, you don't pay taxes on anything. You take out your IRA. Minty Fresh, did you really just say that? Do you honestly believe that the federal government somewhere, somehow is not going to figure out a way to tax your Roth IRA? Well, you keep living in that little world of yours. Sinbad, YouTube voice is broken tonight. Hope you can get sound fixed soon. Yeah, hypothetically speaking, I got a brand new computer I haven't hooked up yet. I got all this cool software. I have no idea how to use it yet. Okay? People say stick to what you know. Well, I know what I know, and I also know internet technology, IT crap. I have no idea what that. Is AT&T a good stock? Yes, but it's all in one. What's with the new hedge fund? Ooh, Eagle. The new hedge fund, instead of January, it looks like we're going to get that hedge fund going in December. Because the guys that are, putting all the paperwork together, they want to get going fast. So I said, all right, I was shooting for January. They said, nah, let's shoot for December. Okay. But the hedge fund is going to guarantee 20%. You need help with tech. Hire someone, please. You stick with stocks. Thank you, Brian. That's what I'm going to do. All right. No moves for you. Sorry, Joshua. I just need to know how to get out of a 50% underwater stock. One step at a time. What do we got? Your YouTube. Okay. Is this day trading? Anya, how are you today? No, it's not day trading. Are you still starting the hedge fund? Yeah, Eagle, we just talked about that 2 seconds ago. Smoke, what's your favorite option trade you stay in weekly? Yeah, weekly options. I buy on Monday. I like to be out on Friday. Okay, New Jersey 78. We already looked at Mara today. IBRX, we already looked at that, and it was a no. Slurman, good evening. What about cash secured puts? I love them. Lexman, okay, I love cash secured puts, I do. However, I'm only teaching one trading strategy for free. So yeah, I'm not going to talk about that. Best learning school, the School of Hard Knocks. Thank you, Hockey Dude. IRM. IRM, what the hell is IRM? IRM. Interesting. Okay. IRM. All right, we'll have to look at that next time. PSW. That's a personal question. I'm going to ignore that one, but thank you. Sweet Den, thank you. Yes, I am the real James, thank you. What do I think about SBET? Okay, Juan, we already talked about SBET. It's going to be a no. Have you ever seen someone do it? Mindset. How do you feel about trading on the one? No, sorry. I'm pretty much perfectly fine with what I'm doing. Do I do the wheel strategy? No. Okay, you need help with text. Okay. That's it. That is every single question except for YouTube. And I'm going to apologize for you guys on YouTube. Until I get a moderator on YouTube, we're going to try our best. Okay? The word no, democracy, yes. I have no idea what that means. All right. Fantasy football helper. Dylan, if you're asking the question, it's probably time to cut your losses unless you think there's a good potential for it to go back up and relatively soon. I bought NVO and Mera. I have NVO and Mera. Alan, thanks. It was a great night. Have a great weekend. You too. What else we got? What do you think about PSEG? You have to talk about that one tomorrow. How do you think the market will react tomorrow? Okay, Malik. I saw this really cool movie with Bill Paxton and Tom Cruise. Okay? And Tom Cruise says, well, why do you think that is? Bill Paxton's famous. I love these words. Ready? You ready, Malik? Here we come. Don't know, don't care. Simple. Don't know, don't care. I really honestly don't care about the market as a whole. I have 10 or 15 stocks. That's what I'm concerned about. Are they going up? Are they going down? Don't know, don't care. It's one day at a time. Okay, what did I buy it for? What did I sell? What is it at now? What direction is it going? What does it mean? What should I do? They're really not that difficult questions. So if I'm looking at IRM, what I buy it for, 90.55. What strike am I my strike prices am I selling? Probably the 90s. What's it at now? It's at 90.55. Which direction is it going? It looks like it's going down. What does that mean? It doesn't really mean anything. It just means the stock's going down. Do you only sell options on Monday? No, sometimes I do it on Tuesday. One way is you can buy an option 3 years out and get 33%, but I think there is a better way to recover a stock. Now, Dylan, I definitely would never go out that far buying on option. But that's just me. Any day of the week then, always depending, it's always a numbers game. So YO clip, always going to be a numbers game. On an ideal scenario, I like to have all my money invested on a Monday. Because Monday morning at 9:30 when the market opens, that's where I like to do all my trades. Monday, 9:30 at the market open. Because Monday at the open, Friday at the close is the absolute maximum amount of time you're going to get on a weekly trade. Joined and hasn't sent. I have no idea what that means. Okay, so I'm done with all the questions. Awesome! You guys have a great day. We are done for this week. All right. Eric, another down day tomorrow. Start low, go up, then down, up, and then way down. Okay. All right, that being said, you guys over here have a great day, and we'll see you guys tomorrow at 2:30. All right, and you guys over here have a great night. All right, you guys there, done. You guys over here have a great night. Done there. All right, and there you go. Now you guys here have a lovely day. All right, no more here, done there. You guys have a great night. And now the end is near. And Martell, he talks a lot of crap about Nvidia, so don't bother. Mara does follow Bitcoin. Yes, it does. Like a smaller share of Bitcoin, but you don't have to worry about crypto fees. Cool beans. I want to buy TSLL, but not yet. Joey, for all of you who missed gold in the past 5 years, rest in peace. Okay, Joey, I hate to be the bearer of bad news, but apparently you don't do your history. Okay? In the 1980s, gold went from 250 up to 800 bucks. It was a lovely, awesome opportunity for those people who bought gold and took it up to 800. Well, guess what? The people who bought at the $800 mark, you ready for this, Joey? Had to wait 3 decades to break even. Did you hear that? Okay, so the gold was 250 an ounce. It shot up to right around 800, somewhere in that area. I think it was in February 80, 81, somewhere in that area. Okay, I was there. I watched the whole thing. At the high of the market, 800 and whatever it was, it took those people who bought at the high because they thought it was going to keep going, it took them 3 decades. That's 30 years just to break even with the gold that they bought. So now it's what, 2,500, 3,000, something like that? Do you honestly think it's going to continue going up? It could. It could. You don't know. Nobody knows. Gold is good for what gold is good for. Gold is not good for weekly cash flow. So sorry, I don't buy gold. Sorry. We're done.